Good afternoon and welcome to our second to last session in our 2021 Fall Workshop Series. My name is Michelle Chen and I am the proud owner and founder of the Axiom Advancement Corporation. We are a financial institution located in the Hill District community of Pittsburgh. We're so happy you could join us today. And today we have a very special guest, Michelle Jackson Gaines. Thank you so much for being here with us.
So happy to be
Briefly,
here. Mhm.
and Michelle Jackson Gaines is the owner of Jackson Gaines. Prior to owning and operating Jackson Gaines, Michelle's professional work experience included grant writing, negotiating federal contracts, preparation of individual and business taxes, and preparing clients for that IRS tax audit. And that's a big deal. As an
Mm.
enrolled agent, Michelle represents taxpayers throughout the USA in tax matters involving both civil and criminal matters. Michelle brings a wealth of knowledge and experience to her profession and its commitment to service all taxpayers. So thanks again. That's a little bit about Michelle. If we went into all that she does and has done, previously, that would take up the entire time of this workshop. So we won't do that. I'd like to turn it over to her to present on what you need to know to file those small business taxes. Take it away, Michelle, and thank you so much.
I really appreciate the opportunity to talk with the businesses that you work with. You know, it's so important for individuals who are looking to start their own companies, or even if they've already done that, for them to know how to keep themselves always in compliance with the tax laws. So I'm going to start this slideshow. So I call this workshop the Friendly Tax Workbook because it is designed to be your friend. You have to know that you have to make taxes your friend. If you do not, it will always be a source of consternation with you, and that is not a really good feeling or a good way to operate your business, even in your own personal life. So taxes can become your friend, and how does that happen? It happens because you've educated yourself, because you've become knowledgeable about the things that you need to know. Okay, so in today's workshop, we're going to look at tax management. We're going to look at why or what tax management starts with your understanding the tax laws and your compliance requirements, a daily agenda, because that's very important. Lesson 3 is the advantages of tax planning. Lesson 4 is the advantages of making tax friends, both personal and impersonal. And then we're going to end with some common criminal tax offenses. And the reason why I'm ending with that today is because it has become a very significant topic within IRS, and it's expanded the criminal tax offenses to include more of us than to exclude more of us. So it's going to be very important for you to know what those offenses are and how you can be impacted if you don't pay attention and become knowledgeable about what you need to know and how to stay in tax compliance. So our first lesson, tax management, bookkeeping, accounting, financial statements, and audits. Okay, so the burden of proof, as far as IRS is concerned, the burden of proof is always on the taxpayer. Always, always, always. There's no room and little sympathy for an individual to say to IRS, well, I just didn't know. You can't plead ignorance. You have to know what it is you need to know. You have to be able to prove the money that you earned, and you also have to be able to prove the expenses that you incur. It's not enough to say to them, well, I made $50,000 this year. They want to see how you made that. Did you make it because someone paid you? And if they did, then you would have received a W-2 at the end of the year. Or if you are your own independent business and someone paid you $50,000, and that person should have given you a 1099. You can't just say, well, I worked and I just collected cash and that's the amount of money that I made. Especially if that cash didn't go into a specific bank account. There always has to be a trail, a paper trail of what you have earned. So it's not enough to say that, well, I worked and I'm a handyman and I just collect cash and so forth and so on. They have no way of substantiating the fact that you actually did make those earnings. Yes, there are some businesses who pay people in cash. However, you need to take that cash and put it into a bank account so that you have a paper trail and you can show deposits. And then you have to have records, a record book, or put it on a spreadsheet of some kind, or consult with an accountant or a tax professional so that they can help you to identify how you can keep that income record. You can't just tell IRS that you made money. You have to prove to them that you did make that money. So the burden of proof in all aspects is on you, the taxpayer. Knowing and understanding your tax reporting responsibilities. If you are in business, you have a particular tax structure. You are either a sole proprietor, or maybe you registered yourself as an LLC, or an S Corp, or a C Corp, or a partnership. Then your reporting responsibilities are different for each of those entities. You have to know which of the reporting requirements you are responsible for, and you have to know that, because if you don't and you file your reports late, you will be penalized with penalty and interest. Now, with the onslaught of IRS expanding the areas of non-reporting into criminal actions, now you could also face jail time. Okay, but I'll get to that at the end of this webinar. Knowing the changes in tax laws annually and how to apply them, again, means that you have to keep up with what's going on within IRS. Now, IRS has a website, irs.gov, not irs.com, because that's somebody else and it's not legal. So it's always irs.gov. I do understand how sometimes it's difficult, if you're not a tax professional, it's difficult to navigate irs.gov. But you have Google, so you still have a friend out there. And if you just pull up your Google search engine and type in whatever it is you want to know, they're going to grab the information from IRS, from their website, and put it into their search engine, and you still have the information, and you didn't have to search through the IRS website in order to get the information. So make Google your friend. Understanding what it means to be in tax compliance, again, from civil to criminal. We have new laws. We have new documentation that will, as I go through this, that you will see that it used to be that not filing your tax return timely was a civil offense. IRS is now shifting that into a criminal offense. So you want to make sure that you are always in tax compliance. several years ago, probably back in 2013, 2014, the taxpayer assistance centers were created, and the entire focus of their operation was to make sure that taxpayers were always treated fairly. So while on the IRS side, there is a propensity for them to look at everybody as if they're not doing the right thing or you're not in tax compliance, the legislatures, our Congress, created the Taxpayer Assistance Service, TAS, Taxpayer Assistance Service, to make sure that taxpayers were being treated fairly. It is actually the civil division arm of IRS. They actually will, they oversee or can oversee some of the things that IRS does, especially sometimes you will find yourself in a situation where you don't understand what's going on, and the person that you're talking to within IRS is not really helping you because they're not explaining things or they're not giving you the whole picture. And that happens more often than not. The Taxpayer Assistance Center created what they call the Taxpayer Bill of Rights. I call it the 10 Commandments of tax treatment because each one of those Bill of Rights protects you as the taxpayer. And you have the right to be always treated fairly, to always know what's going on with your taxes, to not be exploited, if you will, to use that term, by someone within the service, within IRS. So you have a civil rights division within IRS called the Taxpayer Assistance Service. So if you are in a situation where things are it just keeps going down, and you're not getting anywhere, you can ask for help through the Taxpayer Assistance Center, which, by the way, there's an office in downtown Pittsburgh in the Federal Building on the 14th floor. So you can walk in, but nowadays you need an appointment for everything, even to visit someone within IRS. But if you Googled Taxpayer Assistance Service Pittsburgh, a phone number would come up. You'd be able to give them a call and set up a time to go and meet with them. Problem solved. Another very important aspect of being in business is always being audit prepared. And audit preparation means record keeping. So you have to know that 95% of operating a business is bookkeeping, is record keeping. If you don't maintain your records according to a standard, you are not going to fare well when it comes to the audit. This is 2021, and we just finished the 2020 tax filing season. So if you were to be audited on your 2020 tax return and records, that's probably not going to happen until 2024, 2023, 2024, 2 or 3 years from now, maybe even 2025, because IRS has up to 5 years to audit you. So it's always important that when whatever year we're in, that you maintain the records for that year, so that you are making copies of your receipts. Receipts have a tendency to disappear. The ink disappears from the receipt. So when you get a receipt, you should make a photocopy of that receipt, paperclip or staple the receipt to the copy, put it in a file. So 3 or 4 or 5 years from now, if you receive the audit notice, you have your receipts. The auditor will see that the ink lifted, but they will also see the copy of the receipt because you made a copy of it in the year that you actually incurred that expense. So it's really important to keep all of your receipts. It's really important to make sure that you are downloading your bank statements each and every month, because they're going to want to see your bank statements. And if you're not keeping or printing out your bank statements and you go back to the bank's going to charge you now for those statements. So every month, make sure you're printing out your bank statements. Make sure that you, at the end of the year, if you're renting an office space, you get a monthly utility bill and so forth. You need to keep those utility bills and show the pay, that they will show that you actually made the payment. And then you're writing a check to make those payments, or they're being directly debited out of your business banking account. So everything can be matched one to the other. The same thing with gas. If you use your car to go to a meeting, you can record the mileage between your office and the meeting and back to your office. You have to keep a mileage record book in your vehicle, record the mileage. When you go to the gasoline station to put gas in your car, use your bank card that's associated with your business banking account. Cash is not traceable, and an IRS auditor can say, I'm not going to accept that receipt because I don't know whether this was a receipt that someone gave you or you just picked it up. Cash is not traceable. So if you're paying for your gas using cash, you're probably not going to get an IRS auditor to accept those as legitimate expenses, and then you're going to lose out because you probably put those on your tax return and she's going to wipe them out. Okay, there is a difference between bookkeeping and accounting. A bookkeeper is someone who plays a pivotal role in maintaining your financial accountability. They perform transactional and administrative duties, record keeping, managing the day-to-day financial transactions of your business. A bookkeeper will handle your purchases, your sales, your receipts, your payments, etc. So broken down, a bookkeeper is in charge of tracking the money going into and flowing out of a business. Do you need a bookkeeper? Absolutely, especially if you are a new business. Most of the time, you feel as though you can handle this yourself, and you try to do it all by yourself. And then as you start to grow, you recognize, you know what, I need some help. I know that there are things falling through the cracks. That's when you need to stop and hire someone who can help you with the day-to-day management of all the things that I just talked about. Because it's going to be important at the end of the day. It's going to be really important for you to have good records. An accountant is different than a bookkeeper. When you think of an accountant, chances are you think of tax planning and bookkeeping of being like the same activities. But an accountant may run the company's numbers and may have control over the general ledger. An accountant is responsible for far more than just crunching the numbers. They can be viewed as less transactional and more analytical. They take the financial data that's been meticulously recorded by the bookkeeper, and then they extrapolate trends and different kinds of information. So do you need both? Absolutely. Is it something that is affordable? It can be. You just have to search around and try to find the the best uh, of both worlds. Okay, so you can have a part-time bookkeeper, someone who comes in maybe once a week, maybe even twice a month, just to make sure that everything has been um, logged in, everything has been photocopied, everything has been addressed, and so forth. And then the accountant, if you can hire, and you should hire an accountant is someone who comes in to do tax work. That person can then prepare your 941 if you're an employer who has employees, or they can prepare your quarterly profit and loss statement. If you don't know how much money you're making, um, and you don't know how much money is going out, it's impossible to grow your business. So you have to know that those things are really important. Okay, the differences between debts and liabilities. Well, a debt, we all know that's something that you owe, but a liability is something you owe that as well, but it takes a different type of uh, takes on a different type of meaning when it comes to your business. So a debt is something, if you borrow money, that's a debt, absolutely. But then it also becomes a liability against your assets. If you own equipment or if you own a couple of buildings and so forth. So there is a difference between debts and liabilities. Okay, so let's go on to lesson 2. Tax management starts with a knowledge and a daily agenda. Okay. Your day has to take place by arrangement and order. Otherwise, you are in crisis mode from 9 a.m. to 5 p.m. And nothing and no one is ever successful operating in that manner. So you need to list in the order of your clients, to avoid crisis management. You come in and you have a daily agenda, you have a plan. When you do that, your day will operate a lot smoother and a lot more efficiently. You'll also be able to go back and check the day before that, and so forth. If you're keeping a log, if you're keeping a journal, a business journal is always a really good recommendation, so that you start your day with the date, whatever day it is, and then you itemize, you identify or list in the order of things that you need to accomplish in that day by client. And when you've completed each assignment for yourself, then you can check it off. If you don't get to finish your agenda for the day, the next day you start a new agenda, but you can always look back and see what needs to be completed. And it also gives you a record of what it is you've done in your business in any particular day. Always recheck your work as you finish things, because it's easy, especially if you're calling yourself a multitasker, which is never a good idea. Never, ever, ever. Multitasking means that you're diverting your attention to the left and to the right, and you might get something mixed. So we all are guilty of it. I've done it. I try not to do it, because I've done that, and things from over here got mixed up with things from over here. Once you put a file away, if you have done that, you're never going to find that piece of paper, that document. So before you put things away, always recheck to make sure that everything in that file folder belongs to that particular client. so that you never have an issue with going back and finding what you need for that particular person. Always close your files with notes after you've worked with a particular item, a particular client, an issue, or whatever. Make a note in the file, because if you don't, you're never going to remember next week even like what you did or what was supposed to be. Now, where did I pick up, or where did I leave off? What do I need to finish here? Make notes for yourself. And then close the file before moving on to the next file, the next item, so that everything is for that particular item or for that particular client is already done, and you know that it's safe to put it away. Okay, so let's move on to lesson 3, the advantages of tax planning. What are the facts? Well, we have new tax laws, and again, they are all on irs.gov, but sometimes it is not a very easy website to navigate. Make Google your friend. You can type in what you're looking for, but you need to be aware of what the new tax laws are, and how they impact you is going to be based on your understanding of what those laws are. If they are too complicated, if you're reading it and you feel as though, oh, this is like way too much for me, then contact a consultant, tax professional. We as enrolled agents are considered America's tax experts. So we are really practiced in tax law and tax codes. Where to find the new tax laws? Again, you can find them on irs.gov. You need to know if there are advantages to the tax law, what those advantages are as far as you, your business, and your personal life are concerned. There are advantages, there are disadvantages. For example, in some of the new tax laws, one of those laws doubled the standard deduction and eliminated personal exemptions. The same law increased the child tax credit and discontinued other types of deductions. They also changed the tax rates and brackets for all taxpayers. So if you are an individual who still has a W-2 job, your tax withholding has changed. You need to know how that's going to impact the preparation of your end of the year tax return. So you gotta know what's going on. Tax myths. People say all businesses get refunds. That's a myth. A business that's getting a tax refund is probably getting a refund for one of 2 reasons. One, because it had so many expenses, it wiped out any tax obligation according to the income, However, because of the new tax laws, now we have something that's referred to as above the line and below the line. So now you can no longer get your tax obligation completely wiped out. Because even though you may end up with a negative on the front of your 1040, if you look at the second page, you are still going to be taxed. You're still going to pay an amount of tax. If you are a business, then you need to do something called making estimated tax payments. We only make them 4 times a year: April, June, September, and January for the last quarter of the year. So you make your estimated tax payments to the federal government, to Pennsylvania, and to your local taxing authority, depending on where you live. Those of you in Pittsburgh are mostly Jordan tax, but some of you are Keystone, depending on where you live. Like if you live out in Forest Hills, you're Keystone. If you live in Fox Chapel, you're Jordan. So it depends on where you live, determines which local taxing authority you pay your estimated local taxes to. But if you're not making your federal IRS estimated tax payments, they're going to penalize you. It used to be that they didn't do that, but all that's changed. So now it is required, if you are self-employed, you have to make estimated tax payments 4 times a year: April 15th, June 15th, September 15th, and January 15th for the last quarter of the year. You can make your estimated payments electronically. But again, this time you have to go on to irs.gov. They make it easy for you to make your estimated payments because the icons are very clear, and you just follow the prompts on the website. You just follow the prompts, put in your information, and you can make your estimated tax payments that way. That way, you're always in compliance with the tax laws, and you're not late. You can make your payment on the 14th, but if you make it on the 16th, you're going to get a late penalty assessed to you. So you have to be on time with that. Myth number 2, LLCs cannot be sued. Not true. Anybody can sue anyone. What helps you with being sued, if you are, is that all of your records are in order. Because if they're not, then you're going to lose. Your insurance. If you are in business, you need to have business liability insurance. That will help protect you. If you are an S Corp or a C Corp, the myth is that you can represent yourself in any business or court matters. I know a lot of people who just register themselves as a corporation and think that they're in business and that's it. Well, you can, if you are a corporate owner, an S Corp or a C Corp, you cannot represent yourself before a judge or in a court of law. So if you are being sued or if you are trying to sue someone because they owe you money, you have to hire an attorney. You cannot go to court on behalf of that corporation, even though you are the owner of the corporation. You actually are an employee of the corporation. So that corporation is a separate entity. It's like having a child that you gave birth to that child, but that child is his or her own separate entity. So you can't abuse that child, because if you do, we all know what's going to happen. You also can't abuse your corporation because the same things will happen. You could end up with a jail sentence if you abuse your corporation. So understanding how corporations work and what you need to do means, again, educating yourself and finding out what it means to be a corporate owner. Those responsibilities are statutory. So you have IRS who will tell you you have to do this with, for example, if you own an S Corp, your tax return for an S Corp is due in March, not in April. But if you own a C Corp, your tax return is due in April. If you are a partnership, your tax return is also due in March, not in April. But then Pennsylvania has statutory requirements for owning and operating a corporation. So you have to know both. You have to know what the state requires of you and what IRS requires of you if you are trying to be a corporate owner. Hiring people to work for me is at my discretion. No, it isn't. Why? Because there is a difference between hiring someone and paying them as an independent contractor and hiring them as an employee and withholding money from their paycheck. There is a big difference. You have to know that if you are hiring individuals and you're not withholding taxes from that person, you're probably not doing it correctly. And if IRS discovers that that's what you're doing, they can, and you've been paying, let's say you've been paying this person for the past 5 years as an independent contractor or someone you're not withholding taxes from their income. IRS can go back and make you pay all those back taxes. Yeah, and sometimes it puts people out of business. When people say to me, well, I'm just going to pay them under the table. There's no such thing as under the table. People use that expression all the time. It doesn't exist, people. There's no such thing as under the table. Somebody is going to pay the taxes, and that person more than likely is going to be you if you're the person paying someone what you call under the table. You've paid this person $15,000 to work for you for 12 months. But you can't put that $15,000 on your tax return because you can't prove that you paid that person. So you've paid that person, but now you're going to eat the $15,000 yourself or the $20,000. You're going to eat it, and you're going to have to pay taxes on that money that the person you paid should be paying taxes. So there's no such thing as under the table. You need to get rid of that expression because it really hurts a lot of businesses, a lot. Scammers trying their best to gain your trust, confidence, and eventually your identity. So you have to be aware that they're out there and they continue to grow. As we get better with technology, so do they. So you really have to be cognizant and be aware. If you're using your computer, as we all are, to conduct business, get cybersecurity, get some security, get something on your computer so that when the malware people, the scammers, try to come in to steal your information, they can't get through. Hire an IT person or consult with an IT person so that your system is protected. You have a responsibility as a business owner to protect not only your information, but your customers or your clients' information as well. There are IT people out here who that's all they do. Anyone who needs an IT person, call my office. I have the greatest IT person in the world. I'll be happy to introduce them to you. And it's worth it so that with me, for example, he makes sure that he watches my computer. He knows if someone is trying to break in, he knows that. He'll call me and he'll say, Michelle, I'm going to run a test. I want to sort of make sure your system is still operating, and I see something over here and I'm a little concerned, so I'm going to come into your computer right now. You can keep working, but I just want you to know when you see my mouse floating around on your screen, it's me trying to make sure that everything is okay. That gives me so much comfort and peace because I know that my client's information is secure and it's safe. So make sure that you are protecting yourself because they're out here and they're not going to stop. They're not going to go away. So make sure that you protect yourself. Okay, let's go to lesson 4, the advantages of making tax friends, personal and impersonal resources. Okay, and resources are always important. We start with the Community Reinvestment Act, or CRA. Now, why is that important? It is so important because it requires, banks are required to help meet the needs and the credit needs of people in the community in which they do business. So that also includes low income to moderate income. So when you walk into your bank and you're asking them for some assistance, they are required to make sure that they are putting back into the community instead of just taking out. The Community Reinvestment Act was a United States federal law designed to encourage commercial banks and savings associations to meet the needs of borrowers. If they are not doing that, what do you do about it? You can contact one of 3 federal agencies: the FDIC, which is the Federal Deposit Insurance Corporation, the FRB, which is the Federal Reserve Board, and my personal favorite, the Office of the Comptroller of the Currency. I think of the 3, the Office of the Comptroller of the Currency is the one that makes a banker frightened, because they are the pulse of making sure that banks are giving back and doing what it is they said they were going to do when the CRA was created. Get to know what CRA is. When you walk into a bank, there should be a plaque of some sort on one of the walls in the bank that says, this is our CRA mission or commitment. It should be posted. It should be visible. If you can't see it, ask a teller, a bank manager, where's your CRA mission? I don't see it. Nicely, of course. And the fact that you're even asking about that lets them know that you've been reading up on the banking community. And the next thing they're going to want to make sure is that they are responding the way they need to respond to you and your requests, not just you and your requests, but others as well, because they don't know who you know or who you'll speak to or whatever. And they don't want to get in trouble with the federal government, especially the comptroller's office. So make sure that you're nice about it, but make sure that they know that you know what that's all about. Professional memberships, an impersonal resource. It is, because there are different entities that you can belong to that you're going to not know everybody who belongs, but it gives you the opportunity to network on an impersonal basis, because you do so just by being a member of a particular group. Like, for example, I'm a member of the National Association of Tax Professionals. That's one of the memberships. They keep me informed of what's going on in Washington, what's going on with IRS, what's going on with the Federal Trade Commission. I get email from them, and they research and they do the work that I don't have to do, but I can read the reports and know what's going on in my profession. So whatever profession you're in, there is a group, there's a membership that you can belong to. And these memberships are not inexpensive, but you pay them once a year. They could run from $200 to $300 to $400 to $500 a year, but it's worth it. And it's a deduction, it's a tax write-off. So never worry about how much money you're paying to be part of a professional membership, because it's going to be worth it. Continuing education using webinars and conferences. Again, whatever it is your profession, there is someone out there who is doing continuing education, giving webinars, setting up conferences and so forth, although nowadays everything is being done by Zoom, but it works. Probably if you are a landscaper, you're probably not going to go to a webinar or a conference for that. However, there may be a webinar or a conference that if you are a landscaper that you can attend that's going to help you better understand the aspects of owning and operating a business. So again, it doesn't always have to be in your arena, in your area, if this is a webinar or conference. If it's something that's going to improve your performance as a business owner, go to it. take it, it's going to be worth it. And then there are the personal resources, finding a mentor, shadowing someone, reading publications or getting your publications and reading them, and attending networking events. All of those are very helpful especially if you are new, or even if you're not new, a new business owner. But if you are, these are great ways to increase your resources so that your growth is eminent, and it's right, and it's all inclusive. Okay, so let's move forward. I think I might be running out of time. I don't know, but I'll keep going. Okay, that was lesson 4. Okay, no, so we're on lesson 5. Lesson 5, common criminal offenses. Okay. Well, we start with tax evasion. And tax evasion is filed under Internal Revenue Code 7202. This code says any person required under this title to collect, account for, and pay over any tax imposed by this title who willfully fails to collect or truthfully account for and pay over that tax shall, in addition to other penalties provided by law, be guilty of a felony, the F word, felony, and upon conviction shall be fined not more than $10,000 or imprisoned not more than 5 years, or both, together with the their cost that they're going to put on you of prosecution. Now, what does all that mean? If you are a person who has employees and you have taken federal withholding, Medicare withholding, Social Security withholding, and any other type of withholding from that person's paycheck, and you did not turn that money over to the taxing authorities when you were supposed to, then you are guilty of violating Code Section 7202. So while in the past there have been lots of folks who have fallen into this category, I know because I've had to help get them out of trouble. But now, back then, it was only a civil matter. Now IRS has expanded. Remember at the top of this workshop, I said there are these criminal offenses. IRS has stretched it. So now we move to include more people on the criminal side rather than exclude them. So there are lots of businesses who have hired people who remove federal tax withholding from their paychecks, and then they don't turn the money over. When you take someone's money out of their paycheck, that makes you a trustee for the government, because that's their money, not yours, and you have to turn it over to them. In addition to the fact that if you are an employer, you have a responsibility to pay dollar for dollar, that dollar for dollar match of Social Security and Medicare. That comes out of your profit. A lot of people don't understand that. I'm not saying that they don't do it because they feel like, oh, I just don't have the money. They do have the money. They have a profit, and that money comes out of their profit, and they just don't understand. So make sure that you do understand, because if you do not, you could fall into this category of being criminally identified, paying that fine of not less, or not more rather, than $10,000, or being imprisoned for 5 years, or both. And then on top of that, they're going to charge you with the cost of them prosecuting you. It is not a win-win situation. Okay. Willful failure to withhold or remit. It's the same thing. That's 7203. But those that particular code fines you up to $25,000, unless of course you're a corporation. They can fine you up to $100,000 and still put you in jail for a year or both, and then still charge you with the cost of prosecution. False or fraudulent returns. Oh, so many people fall into this category, and it's unfortunate because it's 7206 and it's IRC. IRC stands for Internal Revenue Code. There are over 6,000 codes. No, I don't know all of them, but I do have a reference manual where I can go to. If you get an IRS letter, I know what certain codes are, because there are certain things that just continue to happen over and over and over with different people. It's the same thing, but there are over 6,000 IRS codes, and all of those codes mean something when you are a taxpayer, whether you are an individual taxpayer or a business taxpayer or both. But if you are falsifying a tax return, that's a criminal act. It used to just be all under civil. Now they have moved it to criminal activity. And with criminal activity comes more fines and jail time. That's as simple as that. Okay, willful false statements. You can't make false statements on your tax return or any other item of interest to IRS. They will now consider it a felony. And obstruction and conspiracy, I think we all know what those terms mean. If you are standing in the way of a investigation, you can be criminally prosecuted. And if you conspire with someone to do the wrong thing, you will also be criminally prosecuted. So cases IRS will pursue, there's a common element in all tax crimes. It is willfulness, which is the intentional violation of a known legal duty. IRS looks at your pattern of behavior and your overt works. They know what's going on. They have the information. There is nothing that they don't have. There is nothing that they don't have. So don't think that they can't see what's going on, because they can, and they do. Collateral and civil tax consequences. Well, what that means is if you are in tax trouble, you haven't made your estimated tax payments, you haven't filed your 2020 tax return, and we're getting ready to go into the 2021 tax filing season, and there are people right now who have not yet filed their 2020 return. There are also people who have not filed for 2019 or 2018 or 2017. Now you will begin to face different consequences. Again, they're including more people than excluding more people under this criminal umbrella. You could lose your voting rights. You could lose your right to carry a firearm, although none of us need to do that. Carry firearms, I mean. You could lose financial aid if you are a college student. Employment and professional licensing if you are a doctor, lawyer, Indian chief, judge, whatever. Tax professional, okay, and I'm an enrolled agent. If I don't file my tax returns, I could lose my professional license. My license was issued to me by the Department of the Treasury. But if I don't file my tax returns, they can say, well, we're gonna take your professional license away from you, or I could get suspended, or I've gotten lots of years going back where I just haven't done anything. I could have my license debarred, which means I can't get it back no matter what I do. There are those who have immigration issues. if you are fighting to stay in the country, if you're applying for a green card or whatever the case, then your taxes must be filed. And if they're not going to give you your green card status. You could also lose your passport privileges. If you have a passport and you're planning on traveling out of the country and your taxes are not prepared and filed timely, then you could lose your right to travel. They will call the State Department and revoke your passport. Not worth it, people, not worth it. So keep yourself in tax compliance. It's not difficult. You can make taxes your friend if you just change your mindset. And a lot of times people say, oh, taxes, taxes, I hate taxes. That's the wrong approach. You make taxes your friend. That's why I call this the friendly tax workbook workshop, because it just takes the ability to understand what it is you need to understand. And once you have that, once you've done that, then everything else falls into place very, very easily and very efficiently. And that's what keeps us all safe. Okay, so that's the end of the workshop. I hope I've been able to share information with you to help you know what to do, what not to do. And if you have any questions, I believe Michelle has put my information. No, it's not there, but I believe she does. I believe she has information about my office to share with all of you. You can give me a call. You can send me an email. You can go into my website and send me a message using. There's an email link in my website under Contact Us. Send me an email, ask a question. I'm happy to work with all of you. Okay, everybody have a great day.
What you shared with us has been tremendous. And I was taking notes. As a business owner, I think it behooves us to take notes as we go along, because sometimes we miss things, and often the entrepreneurs that we are serving, they're busy working, they're busy.
Yeah.
And so I encourage you to do as Michelle really stressed today, to get a bookkeeper. And if you can't afford to hire a bookkeeper, there are automated options out there for you. In fact, we have a creator of a new automated accounting software. We'll be making that video available to you, but it is essential to have a tax professional like Michelle Gaines, Jackson Gaines. And so if I may, Michelle, just to sort of show that I was participating and I was an attentive listener, I'm just gonna give them a few points to kind of say, these are the takeaways from today. And to wrap it up, one thing that you stress that I really would like to co-sign: ignorance is not an excuse.
No.
At no point in time will the IRS accept that and say, okay, that's fine, you didn't know, so we'll just remove those penalties. That is not reality. A paper trail is essential.
Yes.
Know your tax structure so you can know what your reporting requirements are.
Correct.
The website is simple, irs.gov. It's a simple Google search. And now what I think is of particular importance, non-compliance is now a criminal offense.
Correct.
And so you are literally giving them, what they need to stay out of stay out of
No trouble.
non-compliance. And I hope that
Mhm.
people are taking notes. Also, you
Mhm.
know, the IRS, yes, it can feel like the big bad wolf at the
Mhm.
door when
Mhm.
it comes time to pay, but they have created a civil rights division called the
Mhm.
TS. So
Mhm.
taxpayers, now you have an advocate. And
Correct.
I wanted to talk about that just briefly, Michelle.
Sure.
I do know of some clients, one in particular who was basically being threatened or being terrorized by
Mm.
an IRS official who, they were not giving them the
Mhm.
path to
Mhm.
becoming
Mhm.
solvent or to come into compliance, but they were
Mhm.
basically just telling them this is what's going to happen to you, and then this will happen to you. And so when a client comes to you after they've been terrorized, not to say that that is the way. That's not the
Right.
typical process or the way that um, clients are treated by the IRS. But in
Mhm.
that case, when they're ruffled up, and they're, kind of afraid and don't know what to do, what do you
Right.
say to them?
I fill out the form, and I personally walk, well, before COVID, I would walk it into the Taxpayer Assistance Service Center down at the Federal Building. Um, no one has the right to be harassed or intimidated by anybody who works for IRS. No one. And when that happens, your rights have been violated. Now, when they created the Taxpayer Assistance Service Center, everybody within IRS started to recognize that they weren't going to be able to get away with stuff like that anymore. Sometimes some folks have still continued to do that. It has subsided quite a bit over the last 5 or 6 years, but it does still happen. I had a case back in 2015 where I didn't the taxpayer called me and said, she got this notice, and she talked to the person on the phone, and this is what they said. She had like almost recorded the entire conversation. I was like, oh no, that can't happen. And it just so happened in that year, I was I sat on the board of directors for IRS, and in that year, I met the woman who created the Taxpayer Assistance Service Center. So I emailed her and I said, Nina, I have a taxpayer, a client who needs some help. And I sent her the transcript of what my client sent me so she could read it. Instead of her passing it off to one of her staff people, she called my taxpayer herself and walked it through and had it resolved. It was so there are really good people who work for the Taxpayer Assistance Service Center, really, really good people, really fair. There are times when a person who is in the wrong will try to misuse the Taxpayer Assistance Service Center. They're not going to let you do that. But if you are in the right, they will absolutely take your case, walk it through to the end, and get you the resolution that you are looking for.
Wonderful. I just think it's important for many times entrepreneurs, they become so afraid of what
Yeah,
the taxes and penalties may be. So, and they
right.
don't know where to start. And
No.
so to know that there is an enrolled
Mhm.
agent like yourself who is saying, come to me, we'll find a path forward. I think that's why we had to have you on, do a presentation during our workshop series. It's so very important, even if you
Mhm.
haven't filed for years. And Michelle, I don't know if you're allowed to say, I know you won't say the name, but you have dealt with clients who
Mhm.
haven't filed for over 5
Mhm.
years, correct?
Absolutely. Absolutely. I've dealt with clients. I've had clients um, within the last 2 years where I had to go back to the year 2007 or 2008 and file tax returns. So we can always go back and file. Now, normally, IRS doesn't want to go back more than 5 years, but I just had a recent client that they made me go back 7 years in order to bring that person into compliance. So if you haven't, if your audience is still watching, the one thing that you want to do is bring yourself into tax compliance. Don't let them come after you, okay? Because it won't be pretty.
You approach them.
You approach them, right, and get yourself into compliance. Right.
I think that when we as the taxpayers are the ones who are opening that conversation, that you fare better in what you're doing, because it shows that you're not trying to be willful. You
Right.
recognize that you have made an error, and you're working with them. And many times, I know we've spoken at length about this, there's the opportunity to work out some kind of payment arrangement. Can you
Absolutely.
tell us a little bit about that?
Yeah, there's a program, IRS has a program, it's called Fresh Start, and it allows you to put your tax liabilities into this hole, or this hole, in order to get things back up on track. So they want to work with you. They will work with you, but the longer you delay, the longer you lay back, then the worse it gets. And let me just say one more thing, Michelle, as far as tax compliance is concerned. When they put out this information about the stimulus money, and everybody wanted that stimulus money, but the only way to get it was to file a tax return, or or to go onto the IRS website and give them certain information so that you could get the stimulus money. Well, don't you think that had another purpose? Right, it had another purpose. So when people are saying, "Oh, we're going to give you something," no, they're not. They're setting it up so that, yeah, you're going to get something, but they're going to get something in return, for sure.
Yes, I won't call it a bait and switch, but I think this ties right into, there is no such thing as under the table.
No, it
You
doesn't
will
exist.
account, whether you as the receiver is accounting for that, or the giver is
That's
accounting
right.
for that. There
That's
is no such thing. And another thing I want to, just want to stress that you said this and it struck me. Paying, sometimes if you wait, if you delay, and you just let it compound and just add up, paying those back taxes and penalties and fees can actually put you out of business.
Absolutely. It can absolutely put you out of business. If you have hired people and you're not paying them properly, and there is one of the 6,000 codes that I said existed, there is a code for that. Okay, employee versus independent contractor. You can go on to the IRS website and put in the search box, employee versus independent contractor, and the publication's going to come up, and you can read it for yourself to know that if you've got someone who is not in control with you in your business, that person is an employee. So that means if you're not paying them as an employee, you have misclassified them according to IRS, IRC code something. And they will reclassify that person and make you go back and pay all that back, all those back taxes. I could put it. It depends if you have a person that you've been paying a pretty good wage over a number of years, it could put you out of business.
It all adds up. That's why I love, numbers aren't about having an opinion or hypothesis. It is what it is.
It is.
And honestly, and I just encourage, this is part of, as you say, practicing your business,
Right,
controlling, making sure that your ducks are in a row. If you don't know what you have, what you're getting, what you're paying out,
right,
you have got to stop
correct.
what you're doing and get that in order to move forward.
Yep.
Another good point from you was basically operating in crisis management mode is not a
No,
badge of honor. You will
no,
not get credit for
no,
being a multitasker.
no, no, you won't. No,
No,
you won't. No,
it
no,
it will not be good for you. Go ahead,
no.
Michelle.
No. So yeah, focus on one item, one thing at a time. And you'll find when you do that, you're gonna feel you're not gonna feel that stress. It's like you're doing what you need to do for this person, you're paying attention to this item, um, and getting through what you need to do. You're a lot calmer. You don't have a headache. You're not like, oh, I've got all this stuff. It just goes away. One thing, multitasking is never, ever, ever a good thing, ever.
I also want to encourage, you know, the entrepreneurs out there who are watching this. It is so important that you recognize that you, as a business owner, are not required to be an expert in every field.
No.
However, you are responsible if it is a field that you are not. This is not your wheelhouse, doing
Right.
accounting or bookkeeping. Make that a line item in your budget and
Absolutely.
find
Right.
a professional, an expert that can
Mm,
help you so that you can have that peace of mind. It
mm,
does not have to be a frustrating
mm.
process for you to build your business. And here
Correct.
are the tools. Michelle Jackson Gaines is quite the resource. And I must add, in her list of accomplishments, it's unthinkable for some when I kind of describe who you are and where you do business and how you've
Oh,
managed to keep that business and to grow it,
mhm.
in Pittsburgh, where, if I cite that research that was produced or published in October of 2019 that says Pittsburgh is the worst place for Black women to live. And here
Mhm.
you managed to thrive. So for those of us who are minority women business owners, it behooves us to, connect with you and learn from you. And these are the principles that you follow so that you are where you are now. So, I just want to honor you for the
Yeah.
example that you have set, that it is actually possible to run a successful business for how many years, Michelle?
Oh, I don't know, 30 plus years. But again, when I go back to when I look at 30 years ago, I had to do the exact same thing. I had to focus on one thing at a time. So back then, I was raising my children. So I figured, okay, if I try to raise my kids and develop a business, somebody's going to suffer. Somebody's going to suffer. So let me pay attention so I don't end up with crazy kids. I focused on making sure that they got through. Then once they got through, then I could focus on my business. So, one thing at a time. Again, multitasking. I didn't want to do that because you don't know what you're going to end up with kids up, and so forth. So you gotta put everything into the right perspective. And when you do that, and trust God, of course, first, always first, then everything turns out the way it's supposed to.
Okay, so as we're tying it up for many of our aspiring entrepreneurs, specifically the minority women business owners, I just want to leave you with the last word. If you have any additional advice for them, especially in this climate and with, most notably with us now having a Black mayor. which
Yeah.
is, you know, a new beginning for us. There's an opportunity here, you know,
Mhm.
for us to see some changes. And so if you can just give us a few words of advice and, you know, close us out. Thank you.
Well, well, if I need to say anything other than what I've already said, it would be to focus, to take each day one thing at a time, because you know everything in life is an elephant, everything, and there's only one way to eat that elephant, and that's one little bite at a time. So just take each each day. If you just do 10 minutes of something to get yourself prepared for the next 10 minutes, and focus on that 10 minutes, and then get yourself prepared for the next 10 minutes, you're always going to be successful. You're going to walk right into success. And when you look back 30 days from today, you're going to be able to see your success, because you're going to be able to see how you did it one step at a time, because you're going to document it, you're going to write it down, and you're going to be able to go back and see exactly what you did and how you did it. And then you're going to build on that. And once you do that, then you're going to be able to grow one step at a time. One of the things, and I'll make this my last word, patience. It's the hardest thing after obedience is patience. You got to be patient with what you're doing. You can't rush it. You can't give it to yourself overnight. It just doesn't work. You have to give it to yourself one step at a time to be successful. That's
I
it.
love that. Words of wisdom, and we look forward to delving into your path. I know you won't say no, but I think it's important for us to know what the journey has been like for you so that we can learn from
Mhm.
you. You know, we're seeing the finished product, but what did it look like in,
Oh,
in year 8, in year 15? And so we look
oh,
forward to having you back. And thank you also for your continued support of the
ab-
work that we're doing at Axiom. And to all of you who were not able to attend, we're making the video available to you. And at the end of the video, you will see all of Michelle's contact information so that you can reach out to her and move fearlessly and build according to what has been shared with you today. Thank you again. We look forward to seeing you in the next session.